Before we get into today's video, I have a very important question for everyone watching this. Why do you invest? What is your why? Is it to be able to afford nicer homes, nicer cars? Is it for financial protection and the peace of mind that provides? Is it to live life on your own terms? Is it to retire or retire early? Is it to have the best healthcare? I know some of my European viewers, you might not understand that, but for a lot of us US folks, healthcare is very, very expensive in the States. Is it for fun? Do you enjoy investing? Is it like a hobby to you? Is it to create generational wealth that you can pass down to your children and grandchildren? Is it for charity? Because there's many causes you would like to help in this world. But let me know your why in that comment section, because I'm very curious to hear what everybody's whys are. And by the way, never ever feel bad for your whys. If your why is because you want the multi-million-dollar mansion overlooking the ocean in Newport Beach, respect. If your why is because you want your children to have a bunch of money and grandchildren to be in a great financial position, respect. If it's because you want to create a lot of money so you can give it to charity, respect. Don't ever feel shameful about what your why is, but know what your why is. I can tell you, for me personally, it's a lot of these. It's a lot of these on this list right here, okay? Now, in this video here today, we're going to go through several stocks to buy right now that have incredible upside ahead. Now, these are what I call throw in the filing cabinet and go chill on the beach for the next 10-year stocks, okay? These are the type of stocks that I don't have to worry about. If I buy these stocks here today, I don't have to worry about them over the next 10 years. They're going to still be there. They're going to still be probably much more relevant than they are today. They're going to be likely making way more cash flow, way more profits, way more revenue than they are today, okay? There's one thing and one thing only I ask from you in this video, and I have a sign in my garage that says it. I need everybody to smash that like button. Hit that like button. Make that like button glow. However you got to do it, you got to do it. That's all I ask. I put a lot of work into this video here today for you guys. I got a lot of stocks to go through. I hope you enjoy this. I hope you appreciate it. I appreciate you joining me. Thank you, everybody. Subscribe to the channel, okay? First stock of this, I don't know if it's like 9 stocks. There's a lot of stocks we're going to go through in this video here today. The first one of this bunch is AMD, Advanced Micro Devices, $138 stock. This is not a stock I personally own, but my gosh, I've done a lot of work on the stock over the past, I would say, few weeks, and I think there's a big opportunity here in regards to AMD, okay? So AMD, obviously, we're at the beginning innings of a decade-long, if not multi-decade cycle in regards to these incredible chips that can help AI in many different verticals. That's going to go way wider than just LLMs. Like everybody talks about large language models today, this is going to go way bigger than that. And obviously, NVIDIA's beaten AMD to the punch. And NVIDIA's the big dog in the market, right? It's approaching a $4 trillion market cap, and they've won. They've gotten first place, and they're going to continue to get first place. But just because they got first place doesn't mean no one else succeeds. AMD is a number 2 player in this market, and I think they're going to carve out a phenomenal market, and they're going to play a lot of catch-up over this next few years. And so you're going to see a much bigger revenue acceleration likely in AMD over the next few years, and bottom line increase in regards to that percentage as well than NVIDIA, okay? So when we look at AMD, forward P 27, 2-year forward P, which honestly analyst estimates are probably way too low on that 2-year. We're probably trading way under 20 right now. But even if we went with analyst estimates, 23. Next year, expected earnings per share growth is over 200%. Next year, revenue growth expected is about 28%, okay? Keep those numbers in mind here, because you're going to see some projections here in just a moment and realize, oh gosh, like AMD's a pretty big opportunity, right? Now, when it comes to AMD, great balance sheet on this company, by the way, and it's just a phenomenal next decade ahead for this company. But this company is going to be on a rocket ship ride, specifically 2025 through 2027. So looking at 1000xstocks.com, we're taking analyst estimates for the coming quarters in here, right? And look at how that revenue is expected to skyrocket over the next several quarters. And I think that's going to play out all the way through 2027. Okay, keep in mind, after 2027, and AMD should definitely continue to grow revenues as well. It's just that rocket ship ride of just incredible growth is really going to be over this next few years. Now, additionally, if you look at what's expected to happen in regards to earnings per share, same exact phenomenon. We're about to see a skyrocketing in earnings per share, right? This is where we're at right now, and this is where we've been at for AMD, right? Now, check out these projections here and get ready to have your flapjacks flipped. So, Next year, 27% revenue growth roughly expected by analysts. They're probably doing 30% plus, by the way, but I'm not going to go there. We're just going to run 27%. And analysts are at over 200% growth in the bottom line for next year. So I did that, okay? Then after that, I just went with a 20% top line and a 20% bottom line. Now, those numbers are probably pretty conservative regarding AMD for this next many years, okay? Probably very conservative. So I went conservative across the board. I went under analyst estimates on both those, and honestly, this is pretty sleepy numbers for AMD from 2026 to 2028. But you run those numbers, right? That puts them at net income margin around 27%, which is about half of NVIDIA's. NVIDIA's running a net income margin right now of like 50+%. It's ridiculous, right? If we run this company, if they're growing top line, top 20% on average a year, and bottom line 20% on average a year, 35 to 45, easy P ratio to command if you're a company that's growing 20% top and bottom line. Cake, okay? Check out the return profile of AMD. We're talking about a compounding annual growth rate on the low end of 24%, high end of 32% for AMD. Oh boy. And I think I went with conservative numbers across the board. So, the moral of the story is Jeremy needs to get buying some AMD stock because, my gosh, pretty big opportunity there. Number 2 of these stocks, that's a lot of stocks we're going to go through here, that's an incredible opportunity, is throw it in the filing cabinet. Meta. Don't let the gains fool you. When I show that $779,000 gain, the 386%, don't let that fool you. There's major gains still coming for the stock. This stock is likely going to be $1,000 plus in 2025 or 2026. It's going to hit $1,000 first for the first time ever in one of those 2 years. Okay, and I'll take you through the projections in just a moment to show you how that's going to happen. It's actually pretty easy how it's going to get there. And then the stock's going to do its next double up. It's going to go to $2,000 plus a share, likely in 2029, 2030. Okay, so let me show you what we're looking at from Meta. I went with 15% revenue growth on average per year. Pretty doable number. Meta's been growing revenues at like a 20% plus clip. I have them doing, slowly slowing down as the numbers get bigger and bigger and as they scale to $200 billion plus of revenue, right? So going down to a 15% number on average, 2025 to 2028, okay? I have them doing net income growth at 20%. They should far outstrip the revenue growth. They're keeping cost downs in a major way. And so every bit of revenue nowadays means much more the bottom line of Meta than it used to mean, okay? So net income growth of 20%, I think, is pretty in the bag. That puts net margins of this company around 42% come 2028, which is definitely a doable number considering where their net income margins are at now. They're already reaching high 30s now at this point in time. Now, if the company's got 15% revenue growth, 20% bottom line growth, a 30 to 40 Ps in the bag, that's easy peasy, that's lemon squeezy, okay? So check this out. That would put the stock at $1,000 plus, and once again, either 2025 or 2026. It depends on what type of valuation multiple they're going to get in 2025 or 2026. But in 2026, the stock, I would say, is likely to be somewhere between about $1,000 and about $1,300 in 2026. But there is a potential the stock could reach $1,000 plus in 2025, right? Now, if we go out to 2028, right, we're looking at a stock price that's likely between $1,400 and about $1,900. And remember, I told you the stock's going to likely hit $2,000 plus a share in either 2029 or 2030. This is why, right here, because you keep running these projections out and you realize, okay, 2029 or 2030, the company's likely then $2,000 plus a share. So we got a double coming here in likely the next 12 to 24 months. And then we can say about 36 months after that, roughly, we got another double coming in this one, okay, which is pretty darn exciting. So compound annual growth rate on this company could easily approach 25%, could even approach 35 or more percent for this stock overall. So when it comes to Meta, it's just easy to throw it in the filing cabinet and not worry about it. They own Facebook, the giant. They own Messenger. They own Instagram. They own WhatsApp. I mean, this company owns communications. Has people realized that yet? They own Llama, right? Which the Llama model could end up eating OpenAI. Not a lot of people have even started to play that game yet, but if you talk to a lot of the high-level folks in Silicon Valley, they're starting to realize, oh my gosh, like Llama might end up eating OpenAI. The one that might benefit the most from all this AI stuff that everybody's talking about might actually end up being Meta in the end. They own MetaQuest, which is clearly the winner when it comes to VR and AR, right? With that headset, they're clearly beating everybody in the market. Meta glasses, which are a huge success, that they partner with Ray-Ban on there, which are those Meta glasses that have cameras attached to them. They have, basically microphones that you can talk through them and listen to music, everything like that. It's been an incredible success. They have grade A plus financials in this company, and you got a top 10 business genius in the history of business leading this company. And he's just entering the prime of his career. Like, that's incredible. He's just entering the prime of his career, and he's already a top 10 business genius of all time in Zuckerberg, right? So, Meta, phenomenal setup. Throw it in the filing cabinet, make a ton of money, and don't even worry about the dang stock over the next decade, right? Number 3, third stock up here is PayPal. PayPal is a position I'm now up $72,000. Sleepy stock. Not the most exciting stock in the world, but dang, I like to make money. That's what I like to do. I like to make money. $72,000 gain on this one, up 37% now. People thought this stock was never going to go up, and they were just depressed about the stock if we went back a year ago. Now people are like, oh, dang, this was actually a moneymaker. Like, Jeremy was onto something with that PayPal company, huh? Yeah, I think I was, right? Now, in regards to PayPal, we got a long way to go in regards to this one. Here's what I have them doing. I have them doing 8% revenue growth on average, 2025 to 2028. Now, there's a potential that they could get back to double-digit revenue growth, especially with Alex Chris at the helm of this company, and with how much innovation and partnerships he has working in 2024. There's a serious potential that this company could get back to double-digit revenue growth at some point in 2025 and maybe even in future years. But I'm not going to bank on that. I want to run a more conservative numbers. So I ran them at 8% revenue growth on average per year, 2025 to 2028, right? Net income is going to far outstrip that because they're really focused on profitable growth, keeping costs down, and all those sorts of things. So I've been doing net income growth of about 12% per year on average. Now, keep in mind, if they're going to get revenue ever back to double digits, like 10, 11, 12%, then we're going to be talking likely about net income growth in the 15 to 20% range, which completely throws this valuation model I'm showing you here out the window. And we're talking about way more upside with this company, right? Puts net income margins at not that impressive, considering how great of a business model PayPal has. I mean, 16% net income margins come 2028 isn't actually that high, and I would guess Alex Chris wants to get those net income margins to more toward 20% by that year. That would just be my guess in regards to what he's aiming for. So I think over the coming years, people will realize PayPal is just a stable, great growing business that's going to grow net income 10% plus per year. And if you're talking about people really start to view it as a 25 to 27 P ratio sounds about right for the stock, which gives it a compound annual growth rate of about 17% on the low end, about 19% on the high end. But keep in mind, PayPal is going to likely buy billions of dollars of its stock back year after year after year, which is going to help earnings per share immensely. So this could easily be a compound annual growth rate on PayPal over the coming years of 20% plus. And that's from where the stock is now. So I know I made a lot on this stock already, 72,000, but I'm telling you that's just the start of the gains in regards to PayPal. A long way to go here. Remember, they own PayPal, Venmo, Braintree. They now are starting to likely generate a lot of more data-related revenue, advertising-related revenue, right? And I'm sure they got a lot of new services and products coming down the pipeline here. So, I like PayPal. Next one up here, next one of these stocks, number 4 of this bunch is Cheesecake Factory. Cake will bake a lot of cakes for investors in the future here, and I mean a lot of cakes. So, cakes now in stock are up $26,000 on, up 33%. That does not include dividends, which I think they're going to pay me out a bunch of dividend money here, likely in the next couple weeks, which I'm looking forward to collecting all that dividend money here. But Cheesecake Factory, incredible opportunity to throw it in the filing cabinet and go chill on the beach for the next decade, okay? So when it comes to Cheesecake Factory, they just got their price target upgraded here from Wedbush to $59 a share from $52. I think that's a pretty fair, kind of expectation. I think they could beat that. They might be in the 60s at this point next year, but I think 59 is pretty fair for the stock 12 months from now, right? Now, when it comes to cake, and why it's such an easy stock to hold, is they got an ATM business, which is a Cheesecake Factory, that one of the most successful restaurant concepts in the history of mankind, right? Additionally, they have 2 growth concepts that are basically guaranteed successes. Like, it's incredible. Flower Child in North Italia, that's expanding all over the United States of America over this next 5 to 10 years. And so that's going to be all over the place. And they have 2 restaurants that are the potential next major expansion opportunities for them, which is Blanco, which is a Mexican concept. And then the other concept is Culinary Dropout. And so those are kind of more in testing phase and trying to see if those will be prime time expansion candidates like Flower Child in North Italia is. Now, this is a rare combo because when you're dealing with the restaurant industry, many times you either have restaurant chains that are, let's just call it, they're just trying to be an ATM. They're just trying to collect what they can, and they're really like falling off over time, right? And they trade at low valuations. And then you have other ones that trade at ridiculous valuations, like let's say a Wingstop or something like that, but they don't have any ATM business behind them, and they only have one growth concept. And so if their one growth concept fails, plus they have a super rich valuation, they don't have an ATM behind them, they could end up in a lot of trouble, which makes you not sleep very well and not feel very good at the beach holding those sorts of stocks, right? So when it comes to Cheesecake, got the ATM, got the expansion, rare combo. You're not going to really find this in any other company out there in terms of that rare combo and a very low valuation. That's the other thing. If you look at the P/E ratios, they're incredibly low in this company. So that's an extremely rare combo that you're just not going to find anywhere else. And so it's really, to me, buying Cheesecake stock this year is like the most attractive investment opportunity in the restaurant industry, and not by a small margin. I'm talking by like a mile and a half. By a mile and a half opportunity. I think Wall Street's going to realize this over this next many years, and they're going to pile into this stock. Now, if you want to hear me talk more about Cheesecake, it was one of many stocks I spoke about on the 6 stocks to buy now, November 2024 edition. It looks like 94,000 people have gotten to see that video so far. Cake was the first stock of the 6 stocks I spoke about in that particular video there. So whenever this video is over, if you want to check out the video and hear me talk more in depth about Cheesecake Factory, definitely check out that video there, okay? Before we get into the rest of these stocks, listen, if you need help becoming a much more, it's called experienced investor, know what you're doing in the market, the pinned comment down there is going to be an application to get all of my premium courses: Become Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, all my best courses ever, my premium courses, right? And plus get access to our incredible community of 6-figure, 7-figure, 8-figure investors, people that have learned under me and been able to scale their portfolios. Pinned comment down there, you can click on that, fill out an application. We'll see if we can get you access to that next week or in the next few weeks, to all that, so you can begin to take your game up to a much more high level. So if you're more serious about this, you really are serious about building your wealth, that's a group you want to join to get access to all that. So once again, pin comment down there, fill out a form. We'll see if we can get you access to that once you apply and all that good stuff, okay? Next stock up here is, well, it might not be this stock, okay? Listen, Palantir, incredible gainer for me. It's gained 630%. I've gained 630% on Palantir stock, gained $255,000 on this stock now at this point in time, right? This stock is up 202% in the past year. But what if I told you there's a stock that's destroying these returns in the past year? You might say, that's got to be impossible. 202%? How could any stock be beating this stock? And then you might say, I know what the stock is. It's nvidia. It's got to be nvidia. No, it's not nvidia. Nvidia is around the same return profile as Palantir over the past year. So no, it's not nvidia. You know what stock it is? It's a stock almost no one would think about. This company is the Honest Company, a company that sells diapers, wipes, soaps, shampoos, cosmetics products. This sleepy company is up 348% in the past year. Absolutely trouncing the returns. And as somebody that made a lot of money from NVIDIA stock, it's trounced those returns. As somebody that's made incredible gains on Palantir stock, Honest has destroyed those returns over the past year. 348%. Honest was one of the stocks I spoke about in this video here. 3 high potential stocks to turn a little bit of money into a lot of money. I don't know if you guys got a chance to see that video, but Honest was one of those stocks I spoke about it there. And the stock was in the $3 range at that particular time, right? Now we're talking about a stock that's well over $6 and has a long runway of growth ahead. And we'll take you through that in just a moment, okay? Now, I got to answer this question because I think it's very important. What the heck happened to Honest? Why did the stock go down to $1? Like, how did that happen? Listen, there was a potential bankruptcy. 2023, a lot of people were scared about bankruptcy in regards to Honest. A lot of people. The financials were ugly. They were taking huge losses in 2023, right? 2022 was a horrible year. They were completely mismanaged. The CEO was just doing a bad job running this business. I mean, a bad job. Like, I don't know if they were out to lunch. I don't know what the deal is, but they did. I mean, the stock is self-explanatory. You don't get down to a dollar without totally mismanaging this company. They started to have very low cash levels, which, once again, when you have huge losses, which this company was suffering in 2022 and 2023, plus you start having low cash, people start worrying about bankruptcy. And it really wasn't like they could dilute shareholder value because they were all the way down to a dollar, right? And there was just max uncertainty. So if you're wondering how this stock got down to a dollar, it wasn't for no reason. It was for a damn good reason. It deserved to go down to a dollar. It was scary times, right? But since that time, the CEO of that company, Carla, and Kate Barton, all those folks, they've turned this company around in an epic way, where now the stock's $6+. They're starting to make profits. The margins are skyrocketing on the business. I'm talking gross margin growth that I can't even believe. I'm like, what? How did they turn around these gross margins this quickly? It's a miracle of life. They're now cash heavy. They've got over $50 million on the balance sheet of cash now, which this is a small market cap. It's maybe a few $100 million market cap. To have 50 million is crazy number, right? With no debt. So now bankruptcy is completely off the table. Now people are just wondering how much money this company is going to start making on the bottom line. Double-digit revenue growth, and they have a certain future now, right? And a CEO that people believe in, an executive team people believe in versus completely didn't believe in back in 2022, right? So the story's been completely changed forever in regards to Honest. And this stock has significant upside. I did a video on the Reaction channel. I'm not sure how many of you guys follow me on the Reaction channel. Jeremy Lefebvre Makes Money, right? But I spoke about Honest extensively in this video that has 46,000 views so far. The stock will make millionaires. And I was talking about the returns the stock is providing for investors that have bought in the past year and a half or so. And I was speaking about the potential upside here. And so the next move for the stock is likely going to be $10. And then after that, we're going to see how profitable this business model can get. If this company's margins keep increasing, we start talking about gross margins 40% plus, and the net margins skyrocket for this company over this next 1 to 2 years, we're going to be talking about a stock that will head to $15 to $20 in likely the next 12 to 24 months. And so I know it's easy to look at the stock and think there can't be any more gains. It's gone from $1 to $6. You might see us move from 6 to 18 over the next year or two. That's all I'm going to say about that. You might see that. If the management team keeps this progress going, why would I not believe that? Why would I not believe that, guys? Alrighty, next one. Next stock up here that's an incredible opportunity to throw it in the filing cabinet, own it for the next decade, and make a lot of money. This stock is Wynn Resorts. Wynn Resorts. This is a $93 stock here today. A lot of upside in the stock over the coming years, and I'm about to take you through. Now, it is worth mentioning there's multiple billionaires that have bought into this stock very recently, including David Tepper, incredibly successful hedge fund manager, arguably the worst owner of an NFL team in the entire league, but an amazing hedge fund manager. From what I've heard, he's bought a lot of shares of stock. Additionally, one of the most genius billionaire individuals in regards to the hospitality industry has been building a significant stake. I believe he's now by far the biggest shareholder of Wynn Resorts, owning around 9.9%, and he's been buying the stock heavily the last couple of years. That is Tillman Fertitta. And so now we have multiple billionaires buying the stock. So clearly, and when I'm talking about these aren't like some chump billionaires. Like these are real deal Holyfields. When we're talking about Tillman, an expert on this industry, somebody that knows the valuation of these companies inside and out, and which ones have actual great business models that are durable through recessions, through great cycles, everything like that. He knows this industry. And we're talking about David Tepper, an amazing hedge fund manager. His returns are ridiculous over time. So we're not talking about like nobodies. These are big dogs buying into the stock, right? Which I don't usually care that much about when these sorts of folks are buying into stocks like this. But with those two individuals, I like it a lot. Especially Tillman. Really like that he's buying in here. Now, what I believe they see is I believe they see what I see here, which is a company that owns some of the most valuable land in the world, right? in different markets. And so it has many of the most valuable properties in resorts in the entire world, literally. They had their Vegas properties, which are the creme de la creme in Vegas. They have the Macau properties that are on the old part of Macau, which are the creme de la creme properties in old Macau. Then they have the Cotai Strip property, which is just, in my opinion, the crown jewel of the Cotai Strip of Macau. They operate the property that's in Boston, right? They don't own the land underlying anymore when it comes to that, but they still operate the property and run the whole business there, right? And then the Middle East, right? They're building that. I should update this photo. They're way further along than this now. I've seen some recent construction photos. It looks amazing. Like how much progress they made since I made this photo a while back, right? So you have a diverse high-end business that, you know, you don't just have to be scared that they just have one market. Like, for instance, Las Vegas Sands, I like Las Vegas Sands, but the issue with that particular stock is they're so dependent upon Asia now because they sold out of all their North America business. So if anything happens in Asia, you're really questioning it, right? When you have North American exposure, you have Asia exposure, right, to a great extent, and now you're going to have Middle East exposure as well. Talk about being very, very diverse business. So here's what I think is going to play out in regards to Wynn stock. 2025, we're going to start to see a flood back to value and dividend stocks. These stocks have been, dead and forgotten for, the past year or two, right? People are going to slowly start to flood back to these value and dividend names, which are stocks like Wynn Resorts. I believe they're going to up their dividend next year. This is my personal opinion. I believe they're going to up their dividend to 50 cents a share next year. They're paying 25 cents a share per quarter right now. I believe they're going to up it to 50 cents per quarter per share you own next year. Then I believe the following year they're going to move that dividend to 75 cents a share per quarter per share you own, okay, per quarter, right? So then that's going to take it to, we can call it $3 per share per year, right? From, $2 per share. And right now it's at $1. And then I believe in 2027, they're going to move that dividend to $1 dividend per share you own per quarter, which will move it to $4. Now, the reason I believe that is because their payout ratio is insanely low right now. This company also has a history of paying 50 cents, 75 cent, and dollar dividends per quarter. They've done that past before Rona, right? And so they brought back their dividends somewhat recently, 25 cents. I believe they're going to start moving that up considerably, especially now that they have some people that might put a little pressure on them, including some big dog investors, right? And so the dividend gains are likely going to be very fun in the stock, especially for people that are buying the stock under $100. Because you got to understand, when the company starts paying, like, let's say $4 a year in dividends, on a stock you bought for less than $100, run your dividend yield on that. That's, well over a 4% dividend yield on that, which is phenomenal, and especially for a business that's likely going to give you great capital appreciation as well. So it's one thing to just get that great dividend, but it's another when you get great capital appreciation, which I think is happening with Wynn. We'll see the stock go 200 plus over the next few years. Now in 2026, Wynn Middle East hype is going to start building like crazy. A lot of people are going to be talking about that. The company's going to be talking about that. Everybody's going to be talking about this is the most, exciting new gaming property to open in the world in many, many years. I can't even think about the last time there will have been this much hype and excitement around a property, but that's going to be going on in 2026. There's not a lot of hype and excitement around this because, they're still, just building the structure. Like, there's a long way to go there, right? 2026, crazy hype's going to start building in regards to that. And then 2027, it's going to open, which then will take that property from something that's costing them a fortune to all of a sudden making them a fortune. So that's what I believe is going to play out in Wynn stock. And I believe the stock will go to 200 plus, and it's going to be a crazy dividend maker for the stock. So I believe there's two ways to make money. One's capital appreciation. The other is going to be big dividends in future years, right? And then who's to say who's to say $4 a year per share you own is the top in regards to dividends? They might end up taking that to $5, $6, $7, something like that longer term, right? As that earnings per share builds further and further and further between all the different properties. Remember, Macau's still coming back. Macau's still climbing back, right? Macau's still climbing back. And then you're going to have that Middle East property open. What do they do with the land they own in Vegas? Do they sell it off and make a crazy, a cash flow situation there in regards to collecting a bunch of money from that land? Do they build a property there? There's just a lot of optionality in regards to Wynn. So that's Wynn. Number 7 of these stocks up here is, just do it, Nike. What an easy stock to buy. Throw it in the filing cabinet. Own the dang thing for the next 10 years and sleep well. Great. This is a very similar story to a Wynn. Great capital appreciation coming in the stock. Probably more capital appreciation opportunity than Wynn. with also a great dividend on this stock as well, right? Now, when it comes to Nike, this is a very special stock to me because if you guys don't know, I've been doing a series over the past year called Buy This Stock and Don't Stop. And only a few stocks have been featured on this series, okay? I did a video 8 or 9 months ago called Buy Shopify Stock and Don't Stop. Check out Shopify stock when I did that video. Check out Shopify stock now. I did a video 5 months ago or so, Buy Palantir stock and don't stop. Palantir at that time was right about $20 a share. Palantir today is around $60 a share. 4 months ago, I did a video called Buy Tesla stock and don't stop. Tesla was around $180 there. It's a $300+ stock now. Nike, I told you the second half of 2024, load the boat, right? And we'll see where Nike stock goes over the next few years here, but I think it's going to be a whole lot higher than it is today. And additionally, about a month ago, I did a video on ELF when it was around $101 and Celsius when it was around 28 on Buy ELF and Celsius stock and don't stop. So to be on that series is a pretty darn big deal in regards to this. So Nike is an incredible opportunity. If you want to learn more about Nike and my thoughts there, you can definitely check out that video, which is about 37 minutes long. But 2025 is going to be a very exciting year for Nike in regards to getting back to revenue growth, especially in the back half of the year. And then the earnings per share growth is going to be ridiculous. Like, I don't think people are ready for that. And then the margin story starts hitting. Woo! Wait to see the flood back to Nike in 2025. People are going to be trampling over themselves to buy that stock in 2025. It's going to be crazy. Next one up here. This one gets real interesting. This is what I call a combo buy. So this is a situation in which you see two stocks and you like both the stocks, but they're in the same exact space pretty much, or very close to the same space. And so sometimes this makes a lot of sense to de-risk. Let's say there's two stocks you like, and you're like, I really want to own both these. And you also get to take a little lower level of risk because you own both stocks, right? Versus just going in one. It's called a combo buy, I call it. Some people call it a combo trade. I call it a combo buy. I just put combo trade here, right? But these are both buy and holds. ELF stock and Estee Lauder stock. Over the past 5 years, ELF stock's gone up 635%. In a 5-year chart, EL stock's gone down 66%. I do not believe that is what's going to play out over the next 5 years. I think you're going to see ELF still return great returns over the next 5 years, but no 635% over the next 5 years, right? Estee Lauder, I think, is going to perform incredible over the next 5 years. So there's going to be no down 66% over the next 5 years, in my opinion. The big question for me is, does Estee Lauder return like 166% over the next 5 years or more like 266% over the next 5 years, okay? Now, in terms of both these positions for the public count, 1,000 shares I own in regards to ELF stock, right? And it's a $123,000 position, which I've made $115,000 on. Like, that's just, this is just beautiful, right? I mean, investing gets a lot of fun when you could put $7,000 into a stock and it turns into $123,000. It's beautiful, right? And then Estee Lauder is my new position there, right? Which I'm up to 815 shares so far, $52,000 position. My goal is to get this stock as quickly as I possibly can to 1,000 shares. 1,000 shares is what I want, and just hold those babies. That one's, got a huge runway of growth over the next many years, okay? Next one is also a combo buy. Check this out. It's another combo buy, but this one's in the energy drink sector. Celsius and Monster. Celsius stock over the past 5 years is up a crazy 1,691%. Monster over the past 5 years is up 79%, right? Monster is seen as a stable player, big diversified conglomerate in this energy drink space because they own Monster, they own Rain Energy, which, by the way, Monster alone has so many various products, it's ridiculous. They own Rain Energy, they own Bang Energy, and several different other energy drink brands. Celsius is just dependent upon Celsius, so it's a riskier stock, but it has more upside potential over the next, we can call 4 or 5 years than Monster, right? So I'm doing a combo buy here as well, where Celsius, I now own 2,000 shares. And as far as, so Celsius, I have $53,000 invested right now, and Monster have almost $25,000 invested. So basically what I'm trying to do is put about $2 in Celsius for every $1 I put in Monster, roughly. The numbers aren't going to be perfect, but it's somewhere around there. Another combo buy. I hope you guys enjoyed today's video. I appreciate y'all for joining me. Once again, pin comment down there if you're looking to access my entire library of premium courses. If you're looking to access my private Discord chat, see the stocks I'm buying, selling each week, take your investing game up to a much higher level than where you're at. Pin comment down there, fill in an application. We'll see if we can get you access to all that, hopefully as soon as possible. Much love and have a great day.